So guys, in this video we're going to look at the trading and profit and loss account, even the balance sheet. So I'm going to explain everything. Okay, I'm going to explain everything using this 2020 past paper. Okay, so we are required to prepare the trading profit and loss account, then the balance sheet as at that date. Okay, so without wasting much of the time, let's jump right in. So guys, we have this question. We are asked to come up with a trading profit and loss account. So this is the income statement, the trading profit and loss what? And loss account. So, and this is the layout. We have 4 columns, okay? So this first column, this is for details, okay? For details, all right? Then in the income statement, which is in the income statement, we start with the first account, which is the trading note, the trading account. And the trading account, in the trading account, we start with what? With sales here, okay? So we're going to write sales here. Sales. Before we put sales anywhere, let's check if at all we have sales retains. Sales retains or retains inwards. Sales retains, okay, I think we don't have sales retains, so let's put 30, this amount 32,920 in the last column, 32,920, okay, in the last column there, okay. So if we had goods that were returned back due to different reasons, okay, it maybe they expired due to wrong description and color, something like that, or maybe they got damaged while on transit, okay. So those are some of the reasons why goods may be retained, okay. So the goods retained are called sales retains or retains inwards, and they reduce the cost of sales. So since here we don't have, we proceed to cost of sales. Okay, cost of sales. Now in the cost of sales here, we begin with what? We begin with the opening stock. Let's check. So on the cost of sales here, we start with the opening stock. So we have two kinds of stocks. We have this stock and this one down here. So check. This is on the 1st November 2018. This is 2019. So this is the opening stock. So I'm going to say opening stock. Opening stock. How much are the opening stock? 7,000. So in the middle column here, 7,530. Okay, 530. Then from there we add purchases. Okay, why are we adding purchases? I want you to understand here, don't just master how it is solved, but you should also understand how it's done. Now, this opening stock is the closing stock of the previous accounting period. You should understand that. Is the closing stock of the previous accounting period, but it is the opening stock of the current accounting period. Therefore, maybe you feel that this stock is not enough, then you go and purchase more. That's why we add the stock purchases. Okay, the goods that you purchase are called purchases. All right. Now, the goods that you purchase there, before we even write the amount, you should understand, my good friends, that when you buy goods, okay, you may need to maybe pay for carriage, transportation, carriage inwards, or carriage on purchases. You need to add it to the purchases. Now, sometimes you may also maybe goods are heavy, then you ask someone to help you load, or people to load and offload. The money that you're going to pay those people, okay, is not salary, but it's wages. So wages, when it's just the wages on its own, just like wages as it is in this question here, it is a direct expense on purchases, including carriage on purchases. So this amount for purchases is going to, since we have these two things, we have carriage, two items, carriage inward, carriage inwards, which is carriage on purchases, and wages. The purchases amount will come in the first column here as 23,750. 750 there. Okay, then we're going to add carriage. Okay, this is carriage inward, carriage on purchases as it is written in this question. Carriage on purchases is how much? 2,000. So this is the cost of transport you used to transport the goods that you purchased. 2,375. Okay, then you also paid people maybe to offload and to load. Wages. Okay, so we're going to add wages as well. Wages, okay. Wages is 2,450. So we're going to add, we are adding there. Now, listen and listen very carefully, my good friends. As I'm preparing here, this should have a title, the name of the company or the name of a person, the title. Now, since I don't have enough space here, I'm going to tag the title. Okay, the title is tagged there. Okay. Now, when we add these, we're going to have an amount. We're going to have total purchases. By the way, we're going to check if at all we have returns outwards or purchases returns. Returns outwards or purchases what? Purchases returns before we add. Okay, we don't have. So what are purchases returns? This is the situation where you purchased goods, then you notice that some goods are spoiled. Okay, maybe wrong description, wrong color, maybe wrong even quantity. Okay, even quality. So you may decide to return them back to the supplier or to the manufacturers. Okay, now we don't have here, so let's just add these. So let's add the 23,750 plus 23,750 plus 2,375 or 75 plus 2450. Okay, it's giving me 28,575. What do you call this figure? This is called total purchases. Okay, total purchases. All right, then in this case, this time around, we're going to add these two. All right, so that we know total stock available, the opening stock, and the goods that you purchased. So we're going to have 36,105. Okay, this is called total stock available. Total stock available for what? For sale. Okay, total stock available. Okay, total stock available. Now, to the total stock available, we are going to subtract. We're going to subtract the closing stock. This is the closing stock here. The closing stock is 8,950. 8,950. So let's closing stock. Okay, is the closing stock is 8,950. We are subtracting. Okay, so when you subtract that one, 8,950, we're going to have 27,000 I want to write it in the last column, of course. 27,155. Okay, 27,155. That one is called cost of goods sold. Cost of goods sold. Then we're going to subtract here the cost of sales, the cost of goods sold from the sales, okay, which is 32,920 minus this. We're going to have 5,765. This is called gross profit. So this is the gross profit. Sometimes you may find the gross loss. Okay, so this is gross profit because it is positive. If this one was negative after subtracting here, this one would have been the gross loss. Okay, gross profit is the profit before deductions, before the expenses are subtracted, or even income is added. Okay, now let's check if at all we have any income. All right, any income. We have commission here. Commission is income, so we can write here add income. Add income. We have commission. Commission. Now, commission here, we're going to write, since we only have one income here, commission will go direct to the last column and add it to the gross profit. Okay, so when we add it, when you add commission is how much? Commission is 1,450. Okay, 1,450. Yes. Okay, so total income, this one is giving me 7,215. Okay, that amount is called total income. Okay, total income. I hope you are following, my good friends. Remember what I said, that the title, this one should have a title. I just wanted this to fit here. Okay, of which I think, yes, it will fit here. The income statement will fit here, and then we will raise and prepare the balance sheet from this side as well. So make sure you know the title, though I'll tag the title. Listen and listen very carefully. We go to expenses. So we're going to say, since we're subtracting the expenses, we're going to say less expenses. Less expenses. Let's check for the expenses here. Starting from the top, we have capital, it's not an expense, drawings, not expense, stock, no, purchases, no, sales, no, carriage on purchases, no, insurance, yes. So most of you guys make mistake and add wages here. Wages it is an expense, but it's a direct expense on purchases. Are we together, my good friends? So don't make that mistake. So insurance here, and insurance is, how much is insurance? 1,000. So in the middle column, 1,380. Okay, like that. Next, so we skip wages, we go to motor van. If it was just motor van here, it would have been a fixed asset, but this is motor van expenses, so we're going to regard it as an expense here. All right, motor van expenses. Okay, motor van expenses, how much? 1,232. 1,232. Okay, next is cash at bank is an asset, current asset to be specific. Petty cash, current asset. Freehold premises, this is fixed asset. Motor vehicle, fixed asset. Debtors, current asset. Creditors, current liability. Commission income already dealt with. Discount allowed, yes. Discount allowed, It's us who allowed discount on certain products. So we need to include them as expenses 5V80. Rent and rates, yes. Okay. Rent and rates, yes. How much are there? This 320. 320. Do you still have more? Yes, miscellaneous expenses. Okay, miscellaneous expenses. Miscellaneous expenses. So it's how much? Miscellaneous expenses 180. So we're going to write here 180. So we're going to add these. We have let me count so that you don't make mistakes. 1, 2, 2, 3, 4, 5. We have 5 expenses. 1, 2, 3, 4, 5. Okay. All right. So let me add 1380 plus 1232 plus 580 plus 320 plus 180. This is giving me as total expenses. So I want everything to fit here. Okay, so let me just write 3, 6, 9, 2. Okay, this is called total expenses. Total expenses. Now, total expenses will be subtracted from the total income there. All right, 7,125, and we're going to have 3,000. It is positive 3,500 to 3 or 2 3, not 2 2 2 3. That figure, since it's positive, it will be known as net profit. Let me net profit. Okay, net profit. So the income statement is done. All right, it's done from the trading there up to the loss here. Okay, so this is done. I hope you're following, my good friends. Let's prepare the balance sheet from here, but let's take note of the net profit because we're going to use this one. So let me just write it somewhere as net profit. Net profit, let me write it here. Net profit. We found net profit to be 3,523. Okay, let me create space here so that we solve the balance sheet. Okay. Okay. So guys, this question, it is someone who asked me to solve this question. Okay. So even you, when you feel there's a question that you need to be clear, okay, or maybe it's giving you help, please, we are readily available to help you. Okay. So now, the balance sheet, remember to write the title. The title is the name of the person. Okay, the name of the person. This person is Miss Kondwa Chapania. Okay, so this one will be Miss who? Miss Kondwa Chapania's balance sheet as at 31st October 2019. Okay, 31st October 2019. So that is the title. Now we're going to start. This is for details, of course. Details. Then here, this is for cost. This is for depreciation. So just write DEP. This is for net book value. I'll just abbreviate as NBV. All right. Then this is the currency. We're using kwacha here. So units there. Then we're going to start with the fixed assets. All right. Fixed assets. Fixed assets. So when you look at this, let's look at the fixed assets we have starting from the top, going down. We have these two, freehold premises and motor vehicles. Yes, that's all. So I'll write here freehold premises. Premises. How much? Freehold premises were 7,500. So in the cost column, I just write 7,500. We don't have depreciation for this asset. So the same amount will be on the net book value there, 7,500 like that. Then we go to motor vehicles. So right here, motor vehicles. Motor vehicles, how much are they? 1,250. So I'm going to write here 1,250. 1,250 there. Let's double check. Okay, if we still have any. We don't have these, that's all. So let's draw a line. Then we add. This will give us 0, this will give us 5, this will give us 7, this will give us 8. Same amount even here, 8,750. This is called total fixed assets. Okay, total fixed assets. Okay, total fixed assets there. Then you can close from here up to here because leave it open here because we're supposed to use this one. We want to use that one later. So let's go to current assets. Okay, current assets. Now, when you look at the current assets, my good friends, current assets at this level, grade 9 level, they're usually 4 current assets, okay? You have the closing stock, debtors, cash at bank, cash in hand, all right? So when you look at this, our list here, when you look at top stock, which stock are we getting? We are getting the closing stock here. So we're going to write them in the order of liquidity, which means that we're going to start with the one which is very difficult to turn into cash, which is the stock. So we're going to write the stock here. Stock, we are writing the closing stock, which is 8,000 in this column, third column from here, 8,950, 950 there. Then we have debtors. Check closely. Yes, we have here debtors. Debtors are 3,900. Am I right? Yes, 3,960. Okay. Do we have cash at bank? Yes, we have here cash at bank. Cash at bank. Cash at bank is 1,933. Now we check, do we have cash in hand? We have petty cash, which is just the cash in hand. So we're going to add it here as petty cash, right? We write petty cash here. Petty cash is still cash in hand. Petty just means small cash. Even here you can see this is the smallest here as 20 kwacha. Okay? I think that's all. Then you are going to add. Let's add them. When you add, stock is 8950 plus 3960 plus 1933 plus 20. 1933, that is cash at bank. Okay, this is giving me 14,863. Okay, 863. This is called total current assets. Total current assets. Okay, you just write it below this. Okay, because we need to subtract the liabilities, the current liabilities. So we go to current what? Liabilities. We're going to, since we're subtracting them, we're going to write less current liabilities. Okay, at your level, there are usually two. Okay, creditors and bank overdraft. Let's check if at all you have bank overdraft in here. You have bank overdraft, bank overdraft. No. You have creditors. Yes, we have creditors. So we only have one. So we're going to write it. Creditors. How much are the creditors? 5,000, 5,790. Okay, I've never done this question, so this is the first time I'm answering this question because someone just requested, okay, in a few hours ago. Okay, and this is not the first time requesting, so this time I saw a comment, and this time around I just decided, no, let me check it out. And I've seen the reason why this person wants me or wanted me to solve this question was maybe he was confused on wages here, how to use wages, petty cash, maybe even commission here. Okay, but I've explained very well. Let's see. This has to balance. Huh? So creditors is 5,790. Let me double check. 5,790. We subtract them. Okay, we subtract them from total current assets. 5,790. 5,790. We're going to have 9,073. Okay, 9,073. That one is called working capital. Okay, it's called the working capital. Working capital. All right, it's called the working capital. Okay, so that's the working what? The working capital. Let's proceed. So what do you do when you reach this stage? You add the total fixed assets plus the working capital there so that we come up with a net assets. So when we add total fixed assets, which is 8,750, we're going to have 17,800, 17,823. I hope you are following or you are also copying. This is called net assets. Okay, net assets. I can close here. Whatever we're going to do here, down here, has to be equal to 17,823, or else it's wrong. There's somewhere maybe we've made a mistake. That's the reason why balance sheet is called the balance sheet. It has to balance. So this 17,823 has to balance with what I'm going to write down here. So this is what I'm going to write. Check how you balance the balance sheet. I'm going to write this business. This business is financed by capital. This business is financed by capital. So I'm going to write capital here. Capital, how much? Look at the top, the first item there. All right. Just because it's the first item doesn't mean that it's the first to be entered in entered in this income statement or the balance sheet. Okay. No. So you should know where each item goes. Capital comes here under financed by, which is 15,800. Okay. Then to the capital, we are going to add net profit. This net profit I wrote here, So add net profit. All right, net profit. If those one was net loss, we would have subtracted. All right, this is 3,000 3,523. Okay, now when we add these two, we're going to have 15,800 plus 3,523. We're going to have 19,323. Okay, so from this amount, we're going to check if at all we can even add long-term liabilities. Now, when you look closely there, we don't have a long-term liability. Okay, then since we don't have a long-term liability, we're going directly straight into drawings. We're going to subtract the drawings. So we're going to write less drawings. Okay, less drawings. Then the drawings are 1,500. Okay, 1,500. We are subtracting here. Okay, so when you subtract 19,320 minus 1,500, before we find the final answer, remember what I told you earlier, that this is the first time doing this, answering this question because someone requested. So I've never done this question, okay, before. So we're trying together if it will balance, okay. But according to what I've written here correctly, sometimes you may make a mistake. Instead of writing, let's say 8,950, you write 8,930, then it's not going to balance. It will give you a slight difference. Okay, so let's subtract here. If at all we're going to find, so this one is giving me, after subtracting, is giving me 17,823. Okay, 23. This is called the capital employed. Capital employed into the business. Okay, capital employed. Look at this, guys. These two now, they balance. They're just the same. Meaning everything that we've been doing here is just what? Correct. Okay, so that's it. That's how you do these things, guys. Remember, in both questions, I have not written the title on top here because we don't have space. I wanted everything to be written here. I don't want to erase. I didn't want to be erasing. So I just wanted you to look at how this one will appear. So this is the 2020 paper external exam. Guys, if you've enjoyed what I've done here, consider subscribing. Why can't you just give us a like? Maybe a subscription if you haven't subscribed, and also a comment. You can also share with your friend who is also finding difficulties when it comes to wages and how to treat commission. Commission here is income. Where is that one? Petty cash is still cash. Okay, these were some of the transactions that were maybe confusing here. Thank you so much. Remember to subscribe. I love you all. God bless you.